Hi everyone, this is a technical analysis on GBPJPY. Let's start with some fundamental background first. The BOE surprised at the last meeting, delivering a 50 bps rate hike instead of the 25 bps expected. This move was justified by the higher than expected inflation figures the previous day and the really hot employment report prior to that. BOE's Governor Bailey has also reiterated recently at the ECB forum that they will do what is necessary to bring inflation back and they will remain data dependent. On the other hand, the BOJ remains stuck with its dovish monetary policy, even if Japan's core inflation keeps climbing to new highs. There are tentative signs of a possible exit from this policy, though, as we saw in the latest BOJ's summary of opinions, where members didn't expect inflation to return back to 2% as they previously mentioned, and the member called for a revision of the yield curve control policy. On the daily chart, we can see that GBP/JPY had an incredible rally since the last employment report back in the middle of June. The trend is undoubtedly bullish, with moving averages crossed to the upside and the price making higher highs and higher lows. We can notice, though, that the upside momentum is waning as the rally slowed considerably and the price didn't react much both to the hot UK CPI data and the surprising BOE's rate high. These are generally signs of top. On the 4-hour chart, we can see that GBP/JPY is forming a rising wedge pattern, and we have also the divergence with the MACD as a confirmation, given that these patterns are divergent in nature. The price may still make a new higher high here, but we are likely to see a break to the downside soon and a fall into the major trend line where we can find the base of the wedge and the 38.2% Fibonacci retracement level for confluence. That's where we should expect strong buyers stepping in to target new highs, while the sellers will want to see a break lower to target new lows. On the 1-hour chart, we can see that the price is now trying to break above the 183.80 resistance zone. The multiple rejections form an ascending triangle pattern, and this opens up two possible scenarios. A break to the upside should lead to a rally towards the upper bound of the wedge, somewhere near the 185 handle, while a break to the downside should lead to a deeper pullback into the 180 level.